So the inflation story is really interesting. There's been a material improvement in the rate of core inflation in both Canada and the US. I don't think it's mission accomplished just yet for either country, but the factors that pushed up inflation so significantly during the pandemic have largely rolled off, right? So goods prices have normalized. And what we're left with in both Canada and the US are service inflation rates that are higher than policymakers would like. They're moving in the right direction, but they're moving in the right direction slowly. And that will keep inflation slightly above target for some time. The other thing I would mention is the improvement on inflation is more noticeable in the US than in Canada for a wide variety of reasons. But again, it's moving in the right direction. And I would expect by the end of this year, inflation is probably at or close to target. So the likelihood of a soft landing, especially in the US, has materially increased, I would say, in the last 6 to 12 months. We think this is potentially because of we're in the midst of experiencing a productivity boom in the US, perhaps because of increases in investments in artificial intelligence or more flexible work arrangements. The stall speed of the US is higher than what we think it might be. If this is the case, the likelihood of a soft landing is just higher, and rates don't necessarily need to be as high as they are. Unfortunately, I don't think this is the case in Canada. The productivity boom story, again, I think is more likely to be happening in the US rather than in Canada. And so I think it's going to be hard in Canada, or harder in Canada, for elevated rates of household debt that are intersecting much higher rates to really not result in a pullback in discretionary consumer spending. So the way I would think about this is, although we're cautious on Canada, we still want the underlying managers that we use in our funds, in our Canadian equity sleeve, to beat their benchmarks, right? To choose company A over company B and navigate, these tricky conditions to the best of their abilities. If we own them in our funds, we win as well, right? So that speaks to the two ways for us to win. The first, hire talented managers from across Fidelity that will beat their benchmarks. And two, lean in or out of currencies, sectors, styles, or asset classes in such a way to also add return over and above our benchmark.